Sometimes a stock keeps sliding for so long, it starts to look invisible. That's exactly why we keep an eye on companies like WhiteHorse Finance here at Insightful Value, because overlooked doesn't always mean over. So, what's going on with WhiteHorse Finance? And why has the stock been on a prolonged decline? Let's dive in. This review is for informational and educational purposes only. It is not financial advice. WhiteHorse Finance is a business development company, or BDC, that provides debt financing to lower middle market companies across the US. Think of it as a lender that focuses on smaller businesses that might not have access to traditional bank loans. It's part of the larger HIG capital ecosystem, which gives it additional backing and deal flow capabilities. The company generates income primarily through interest on the loans it provides, and it passes a significant portion of those earnings to shareholders through dividends. Now let's talk numbers and the value perspective. At first glance, Whitehorse might seem attractive to income-focused investors. Its dividend yield is high, often well above 10%, but that's also a red flag. Why? Because in many cases, an unusually high yield signals market skepticism about the company's ability to sustain those payouts. And in Whitehorse's case, the market's been skeptical for a while. The stock has been trending down over the past few years, and not just because of short-term volatility. Investors are concerned about the credit quality of its portfolio, interest rate pressures, and overall economic headwinds that could impact its borrowers' ability to repay. Their recent earnings show modest net investment income, but rising non-accruals, that is, loans that are not generating expected returns, are creeping up. Combine that with tighter spreads and increased competition in the private credit space, and you get a picture of a company that's under pressure. From a valuation standpoint, Whitehorse is trading below book value, which may signal undervaluation or a pricing in of future trouble. It really depends on whether you believe the management can steer through the current challenges and keep defaults in check. Still, the company is not sitting idle. They've been reshuffling parts of their portfolio and looking to improve risk-adjusted returns. They've also reaffirmed their commitment to the dividend, though many investors are watching closely to see if that promise holds. At Insightful Value, this is exactly the kind of stock we monitor. It's not about hype. It's about identifying whether a beaten-down company still has solid fundamentals and upside potential. We provide in-depth analysis of companies that fly under the radar. No fluff, no jargon, just clear, actionable insights, whether you're just getting started or managing a serious portfolio. If you want to dig deeper into WhiteHorse Finance and many other underappreciated opportunities, head over to InsightfulValue.com. You'll find more data, smarter breakdowns, and fresh perspectives to help you invest with clarity and confidence. Thanks for watching. Be sure to subscribe to our channel for more straight-shooting investment videos, and don't forget to visit InsightfulValue.com for more.